Okay, so let's unpack those movements with Ridwaan Moolla, who's the CEO of Think Markets. A very good afternoon to you, Ridwaan. The Rand having a good day, just like the JSE. Some nice support coming through from the resources, retailers like ShopRite also rallying quite nicely. And I suppose part of that is because the Rand at some point went back into the 18.90 odd against the US dollar. We're back above 19 against the US dollar, but a decent day nonetheless.
Yeah, I mean, just after that wonderful report saying business confidence is all down and everything else, JSE shrugged that all off. The JSE said it's going to be green today. I mean, big gains for Tugela, up 6.3%. The retail, financial, resource sector all saw wonderful green movements today. Like you said, Spar, ShopRite, Pick n Pay, all of them up over 4.8%. So a really, really lovely day. But as you rightfully said, the big news is the Rand. It went below 19 to the dollar. It was at 18.98. Came back up a bit, unfortunately, at about the 19.05 mark right now. But nevertheless, really and truly a fantastic day for everybody on the market.
Meanwhile, globally, Ridwaan, before we get into the company updates, the global markets were mixed. You saw a little bit of pressure on the Asian markets at some points. And I suppose the global story here continues to be what the US central bank is going to be doing when it comes to its interest rate cycle.
So just remember that the interest rate cycle there, pretty much everybody's factoring that there's not going to be any increases going to happen right now. There's 0% chance of an increase happening. So markets have actually, they steady. And that's one of the main reasons for it. If for any reason something comes out that is in the opposite of that, that's when we're going to see some serious movement happening. It's not going to be, it's not going to be very nice. Let's just put it that way. So hopefully the Fed sticks to the fact that they're looking at leaving rates unchanged. They're not going to be cutting them anytime soon, obviously. And I think that also applies for South Africa, except for the fact we may see still interest rate hikes, potentially another 2. But everybody's looking forward to 2024, where potentially we will start seeing worldwide interest rates obviously coming down.
Okay, well, some company updates. Let's start with African Bank. Their consumer banking division not doing too well, just showing the pressures that consumers are under at the moment. So some of the consumers, I think about a third, Ridwaan, defaulting on their loan repayments with the bank there. But they are optimistic about the full year results, which they say will come back to profitability. What did you make of this interim set of numbers?
So as much as they painted a bit of a good picture, the thing is, let's be honest about it right now. I mean, their impairment charges were up over 240%, which means that's 2.2 billion Rand in bad debt. Now, yes, they've had an increase in operating income and so forth, but the truth of the matter is this is exceptionally bad news for a bank, which, as we all know, just a couple of years ago, was literally finished. You know, African Bank, they split that book in the good book and the bad book, as they used to call it. But this is just really, really not good news. Obviously, African Bank, yes, it's unlisted, so you can't trade in it or invest in it. But at the end of the day, this is not a very good sign, and especially because of the market they're in. It means consumers are struggling, and they have to be very, very careful right now going forward with the way they borrow.
Yeah, and it's very interesting because the unsecured lending is not necessarily a new product offering by African Bank, but it's not an old one. And if they're starting to see this much pressure so early on in that particular part of the business, one would wonder how are they going to be restructuring criteria for consumers to be getting loans? Or do you think that they might see or rather initiate a pullback of the unsecured lending that it offers consumers? What do you reckon the bank might do going forward? Because it does say that it's going to focus on the performance of the consumer banking division going forward.
Well, that's the only real thing they can do. They're going to have to cut lending, and they're going to have to risk manage it a lot better. So what loans are out there, they're going to have to try and see where they can recoup. And obviously, they're going to have to focus very, very carefully right now on who and how they lend money out.
Yeah, no, absolutely. And then another company update that was out today was eMira, a property fund. So they're a mixture of residential, industrial and retail property a company. A little bit of a mixed bag here, because they did say there were some improvements on the rental side, which is residential, as well as some improvements, albeit the pressure of the economy in retail. But overall, what did you make of the update that they shared with us?
So one big thing just to understand about the results that came out, remember this is for a 9-month period, because they changed its financial year end from the 30th of June to 31st of March. So that's the first thing just to take into account. This was only for 9 months. But having looked at that, remember they benefited from two very big things. They benefited from the rand weakening, which helped them because they do have quite a bit of US investments and property. So that meant from a rand point of view, it obviously made it a lot better from an income that they've generated from a rand perspective. The second thing, though, that I just want to highlight on it is they actually didn't really do that well, and that is purely because of the fact that interest rates have gone up, and they have quite a large loan. So they've got to be very careful of that, and as investors, that's one of the things we've been looking at quite closely. Companies which have large loans, because the interest rate is just going up on that, and it's obviously costing them a lot more. So you've got to be very careful of that. Now, having a look at that, obviously, because it was also 9 months, what we saw was a massive decrease in the dividend, which is down 19.2%. It's not really comparable, but obviously it's still down from what it was last year. And that speaks to those two things. Yes, good income from the rand point of view because of the US side of the business, but also they've been paying a lot more on their loans.
As are we all, Ridwaan, those of us with home loans and vehicle asset finance. And based on what you said a few minutes ago, it sounds like you said the SARB is considering 2 more hikes before a reprieve. Ridwaan, thank you for that depressing update. That is Ridwaan Moolla, who's the CEO of Think Markets, wrapping up the day that was on the JSE today. And that's